Hi, it's Steve and Joe from Freshagenda. And Steve, this week we're going to have a look at a few different indicators to see whether China might be back in business.
Yeah, it's the signs out of trade data are encouraging, particularly the March stuff just released.
We'll get to that, yes.
A few things. This comes out of some work done by UBS, the investment bankers, looking at traffic congestion. It's quite interesting, just seeing how there's been that gradual recovery in different levels of city, all following the same sort of pattern, but the larger cities coming back first and harder.
And that's relative to the Chinese New Year there.
Yeah, so it's overlaying averages from the prior 3 years and what that looks like in comparison to the one we're in. Another measure, putting that into context with where other big regions are. So you see there the bottom, Europe and US, how hard the lockdowns are by comparison.
Yeah.
And then at the top, and these are recent weeks. This isn't the full history we saw in the previous chart. These are recent weeks. And we see what's happening in Japan, which is quite interesting and alarming if that's going to come back as a good cheese market.
Yes.
And another measure of industrial activity. This is coal consumption. Not the greenest measure.
No.
But just showing we're a little bit behind.
Yeah.
In that scale. Again, against the Chinese New Year comparison.
Yeah, but certainly made up a lot of ground from February, so it's on the right track.
Look, we just thought that was interesting.
Yeah.
Just to see, that measure of recovery.
It is a big question. Is China back? They've turned up at the last few GDTs. Are they going to continue to turn up? And consumption pull through will have a lot to do with that.
Yeah, that's right.
Yeah.
Look, a topic which has in the last week had a lot of coverage with the announcements from Europe that there are private storage measures being endorsed by the Commission and a proposal for milk reduction schemes at a more regional level, which would gain an exemption from competition law in Europe.
So it basically allows different groups to get together and control production themselves.
Yeah.
And I think the whole package was valued at about 30 million euros.
Yeah, not much.
Not much. I think there were some numbers from Ireland saying it amounts to about €8 per farm. So probably not enough.
Yeah, that's
given what they're facing.
And then look at that compared to what's been announced in the US so far.
Yeah.
Farmer payment scheme, we talked about that last week, 2.9 billion, then product purchases of up to $1 billion. With debate now raging in the US about just how effective they are going to be to force any change.
Yeah. Particularly the product purchases is getting a bit more discussion about how much will actually go on
and how difficult
milk.
It is to meet them.
Yeah.
Yeah. And then earlier this week, the floor price proposal, which came out of the industry, came out of 23 cooperatives, asking for a Class 1, essentially a floor price for several months, which has drawn quite a bit of criticism from, and rightly so, from participants in the marketplace that this would essentially undermine market activity, reward the lack of involvement in risk management, and upset what are essentially insurance programs which are already in place for farmers to protect the downside.
So the argument being those instruments are out there for farmers to manage their risks, and this would basically reward those who don't do that.
Don't do that.
Yeah.
Don't forget, those insurance programs on top of what we see above are going to pay about 1.7 billion, being measured by Maren Bozic and Matt Gould in a recent piece of work. And then you've got untold coverage in futures contracts, which we don't know the measure of. But,
could be significant also for some players.
Could be too,
Yeah.
Moving along, we've added up trade. Again, this is like seeming like ancient history, but
February was so long ago.
it is a little closer to now. Overall trade was down, second month in a row, and again that's driven by skim milk powder, which we'll come on to, but because we had such big numbers in the prior year.
Yeah, the comparatives were huge, weren't they?
Yeah.
So.
But still holding together fairly well. There's our league table with an unusual couple of players at the top of that table. We've never seen them up there before.
Yeah.
Sub-Saharan Africa, powder trade was strong, taking advantage of lower prices. Still good pull-through of fat-filled product, and the CIS making up for local shortages in production. I mean, their own production of cheese is surging, but they're topping that up with imports
Interesting.
into that region.
Yep.
At the bottom, Southeast Asia, which segues us into this discussion on...
It doesn't quite. But
doesn't quite, but it nearly did. Let's look at cheese.
yeah, look at cheese first.
Cheese trade continued to grow, but when you strip that down, go under the bonnet, it's quite patchy and dominated by as I said, the trade into CIS. But below that, quite patchy. Good in China.
Yep.
Not too good elsewhere.
It's been pretty consistent, but obviously it's very important with a whole lot of domestic markets being knocked out for the big cheese producers in the Northern Hemisphere. They might have a little bit more product to put on the export market. So
yeah, so the future direction of those markets is critical through the rest of 2020.
For sure.
Now we'll talk about skim milk powder.
You've waited long enough.
I have. So the big question: when does Southeast Asia, as the biggest market region, come back into the market and take advantage of these good prices, these cheap buying prices? We've seen several months of decline. You can see we're well below trend now in both powders. It may well be a case that the market needs to find its bottom, and until we know when the bottom is, that's the burning question.
Yeah.
Before we see that trade moving up again.
Yeah. Obviously, that region's been hard hit by the general recessionary impacts and lack of tourism. So it's not very visible what's going on there. So yeah, wait and see.
And lastly, New Zealand exports down across the board, came out earlier today, reached us a few hours ago. But again, there haven't been many bright sparks in the start of 2020. But the one thing that was encouraging was the recovery in Chinese import demand for whole milk powder, seen there, just slightly below. And begs the question, we are seeing a building of stocks in China with that increased local production. Are we seeing something of a stock build for better security? That's an issue we cover in our monthly outlook, which is going out tomorrow. But big question about whether we're seeing a different pattern there.
Absolutely.
Speaking of China, brings us to this one.
Great segue. My chart of the week.
Yeah.
Yeah, so this is year-to-date imports for China, and it's a little bit of a mixed bag, Steve, but cheese and butter quite strong there. And probably not so strong for whole milk powder and skim milk powder. But as we've said, a lot of purchases brought forward into the previous year, the last quarter of the previous year. It's still not bad, considering all that and considering the impacts that they've seen from COVID-19.
Yeah, there was gridlock for some time in China. But I think the skim milk powder story here might be the same as well.
Yeah.
Waiting for the best time to buy.
Absolutely.
All right. Good way to finish up. Okay.
Almost a bright note.
Almost, yeah. Thanks for watching. That's where you can find us. We'll be back again next week.